Good morning. It is Friday, the 26th of March. Thanks for joining us. This is the last Friday of the quarter, and pretty exciting. We got a lot to talk about. One thing which is totally new for us, something we didn't expect, but we have a global economy, so we're going to talk about a great big boat. My name is Mike McCauley. This is Market Insights with Mike, a more regular Friday morning broadcast. And behind me in the big blue curtain is Mallory Vaughn, who's our producer and editor. And we're really excited to be here. This is our favorite time of the week. So we'll just get right into it here. The news that has come up is the boat, the ship that in the Suez Canal that is sideways and has it blocked. And the reason this is important is we are in a global economy and we continue to be more and more global. So this is a map of what we're talking about. You see the Suez Canal is at the top of that orange section. There are about, at this point, the ship that's blocking it, and we'll go into that in a second, is keeping behind it through the Red Sea about 170 additional ships that can't get by. How important is that? Well, it's important for a couple of reasons. Off to the right of this map, and we'll show that in a second, is Mumbai, which is a huge port. It's about 10th largest in the world. So the other part that's really important is right here, you see Saudi Arabia, the Gulf of Aqaba, Jordan. This is a huge oil producing area. So the United States and Europe both get a significant amount of oil that comes up through the Red Sea, through the Suez Canal, and then across the Mediterranean. That's part of the reason the Suez Canal is so important to the United States. It's just a huge amount of oil that comes out of there. Plus over here on the right-hand side, you've got Iraq. You've got a lot of stuff up here above Saudi Arabia, huge shipping lanes. And then the problem is that the Suez Canal cuts the time off, and I've used Mumbai here, to get from Mumbai to London is about 7,200 miles if you're able to go through the Suez Canal. If you're not, you've got to go down through Africa. And the important part here is you've got to remember that you've got to stay way east of Africa because of, it sounds silly to be saying it in 2021, but because of pirates. So they head south, they go down across the southern tip of Africa and then up. That is 12,300 miles, almost twice as far. So the Suez Canal is important because of the time it takes to make that trip versus the time it takes to go down under Africa. And what that comes out to is, next slide, Mallory. We'll go into that segment. This boat that's blocking it is 1,454 feet long. It's 194 feet wide. Your regular football field is 100 feet long, which is, it's 100 yards long. It's actually 300 feet long. But it's also, so you've got the boat, which is almost as wide as a football field is long. It's pretty much about 2/3 of the width of a football field. The Empire State Building is 443 feet tall. The Sears Tower is 1,450 feet tall. So this boat that's blocking the Suez Canal right now is as long as the Sears Tower is tall. That's an incredible size, and that's why they're having trouble moving it. About 30% of the world's shipping container volume passes through that canal every day. It's a huge number, 30% every day. Which is almost $10 billion of the global economy on a daily basis goes through the Suez Canal, and roughly about 12% of the total global trade of all goods. This is an important passageway. This ship is called the Ever Given. It's only about 5 years old. It's about 224,000 tons. It carries 20,000 containers on it. And if you've seen a picture, this is incredible to me. This is just an amazing thing to see. Each container weighs about 80,000 pounds. And if you live in this part of the country, you're used to seeing coal trains. You know, if you pull up to the tracks and the bar comes down, you see it's a coal train, you're going to be there for a bit. Well, a coal train, even the smallest one, has about 110 cars. Each of those cars weighs about 240,000 pounds. So the thing that's interesting about that is if you imagine sitting there for that coal train passing, and I know it seems like 15 minutes, it's actually about 7 or 8. But what's on board the Ever Given is equivalent to about 62 coal trains. This is a big boat. So it's blocking the way. They don't know how long it's going to take. And the problem here is that the longer it takes, the more ships that get backed up. However, we're at a point where the ships are going to stop entering the Red Sea, and they're going to start just heading south and betting that it's going to be easier for them to go down and around rather than it is to go through the Suez Canal. So that's where we are. Why is this important? Because there's so many goods on there. And this is my track. The Suez Canal takes about 12 days from Mumbai to London. Cape Horn takes about 20. It adds a lot of time. What's this going to affect? Immediately, it's going to affect the price of oil. We talked before about the possibility of seeing $4 oil by midsummer. You can go ahead and move that up to June if this doesn't get corrected pretty quick. As far as goods are concerned, the weight that I gave on those containers is so variable. If you have a container full of, say, gas tanks for cars, great. The gas tanks are full of air. They don't take up a lot of space. So a container full of gas tanks isn't going to weigh a lot. Or if you have a container full of sheets of metal, it's going to be pretty heavy. What you also have coming across there is containers full of clothing, fabric. So the weight is varied. But my point is that on that ship with those 20,000 containers, there's products that we're going to use in everyday life. So the point here is that this issue in the Suez Canal could cause rising prices to a whole lot of things we deal with every day. So when they talked about inflation, it's one of those things where we weren't really sure what would cause it, but this could cause an increase in prices, and this is why it's important to us. So when you see that report come out at the end of the day on the news about the ship in the Suez Canal, it doesn't mean anything to us. Actually, it means quite a bit. It could mean more the longer it takes. So we thought that was an interesting thing to talk about, something we ought to be prepared for. And when we look at things that we're doing in the office, it's something that we look around. Will prices will go up? We're already seeing that. Prices of clothing could go up. Prices of a lot of things could start going up because of the difficulty getting them moved around the world in this global economy. So that's why the stuck ship is important. So let's go on to our regular stuff. Dow Jones Industrial Average. As of last night, for the week, we were about where we ended up at the close last Friday. Not much movement at all. We did have a decent day yesterday. So we'll see what happens today and where things go. But the important part here is on the left, you're seeing the trailing part. We're going back 52 weeks. And you're seeing the trailing part of the COVID bottom. Doesn't that chart look wonderful? What if we decided to go in right there at the bottom? How really smart we would look. But nobody knew where that bottom was. So here we are on the far right-hand side. Our moving averages continue to eke up, and that's just a nice thing to see. They're eking up. They're not shooting up a lot. They're not dropping a whole lot. You're seeing some nice movement go in. And the Dow Jones right now shows some solid form, and we'll have to keep an eye and see how that goes. We're looking for anything where we show significant drops. And right now, it just looks like there's some strength in the market. Not too concerned that this week we haven't moved at all. So that's fine. Next, we have Treasury yields, and we've talked about this last week, the week before. They still are eking up a little bit. Not so much right now. They're at 1.65 for 10. That's pretty consistent through the last couple of days. That 2 year is, that's scary how low it is. But right now it's at 0.14% for 2 years. So you still don't have a whole lot of choices for fixed income. That spread, again, we've talked about, and if you've listened to me, that spread's really important, that be a little far apart. And so that's nice to see. And the next good thing to see would be for the blue line and the orange line to start kind of creeping up together. And we'll have to keep an eye and see how that goes. Although the Fed has continued to reiterate that the yields that they deal with, the interbank numbers, are going to stay at zero for at least another 12 to 18 months. But we'll keep an eye on that. This is our sector performance. And right now, this will probably be the highest you ever see on the trailing 12. These are amazing numbers, but they are affected by, right now, if we go back 52 weeks, we're in the bottom of the COVID crisis. So you'll see these start to aggregate back to what's normal. And right now, let's just pay attention to 2021 year to date, where you see oil, gas, and energy up 29%. That's great. And again, that will probably keep going up right now. Oddly, healthcare is flat. Technology is kind of flat. And I've said before, we thought technology may have run its really dynamic course, and we'll have to keep an eye on that. Everything else is about where I'd expect it, with the exception of consumer goods. So this is year to date. This middle column is what we'll pay attention to. And that trailing 12 is more for informational purposes. I'm still going to point out it shows how strong this market has been since the COVID, and that's really a good sign. So this is the world markets, how we did. Across the board, it was kind of a boring week. And I'm using boring, not terrible. These aren't awful numbers, but you can still see that versus last week, almost everybody was down. Almost every indices was down. And then that column that's all green, that's still year to date. Those are not bad numbers. Take that and multiply them times 4, and that's what you would look like at the end of the year. So these are really not bad numbers. It's not anything to be worried about. It's not anything to jump out of the market about. It's something just to be cognizant of. How are we doing? We're actually on a decent track for the year, something that we like, something we can accept, and nothing that tells us that anything other than, we're doing pretty good. On the next chart is unemployment claims. There's actually good news in here. If you go out to the far right-hand side, you can see the weekly number dropped this week, and that it was a significant drop. It was down below 700,000 for the first time since late summer, and that's good to see. Remember, I've said over and over, we want that number to be about 200,000, maybe 250. So we're creeping down. We're down below 700,000 for the week, and that orange line is fighting to get down. And this is a whole lot like that top of that blue line is like getting an F on your report card, how hard it is to overcome that F. That was such a big jump that during that period of time in unemployment that it's going to take a while for that moving average to get down, but it is definitely fighting its way down. And that's just right now is a positive thing to see. We don't want to get too excited about it, but we like what we see for last week. As the weather improves and the COVID vaccine improves, we're well over our goals for getting that done. That may be really good news for the unemployment numbers. As far as new jobs, which I haven't talked about before, the new jobs being created are actually also going up. So there's some good things in there, and we'll see how that pairs out. But it's nice to see the combination of new jobs being created and a decline of first-time unemployment. So here we have, this is the volatility index. And again, that looks like a heartbeat, but you can see that, I don't want to put it that the patient is dying, but it's good to see volatility dropping down here. It really is good to see that. This is essentially an emotional number, but as long as this number is down here, we're okay. We have a moving average, we have a 7-day and a 14-day moving average, and those numbers keep trailing down. So that's a good thing to see in the economy. It's a good measure, and we'll keep our eye on that. Now, what do I expect? I expect in the next couple of days for that to take a little bit of bump, but I could be wrong on that too. So that's where we are. Our calendar coming up, end of first quarter comes next week. We'll get some earnings report, not a lot. On April 2nd, which is next Friday, a week from today, the market is closed. We'll be here, but the market, equities, bonds are all closed. The bank is open, and everybody will be here to help you out. On April the 12th is the International Day of Human Spaceflight. We talked about that. First, Yuri Gagarin went up on that day. And then May 9th is Mother's Day. And as a famous coach once said, call your mama. A good day to call mom if she's available, and remember mom if she's not. Still, again, so you're ready to podcast break sometime in June or July. We've got to work on our calendar for that to try and do some upgrades, and we'll keep in touch about that. That's where we are for the week. It was really exciting. Keep watching where we are. Tell your friends we're here. No harm, no foul, no politics. Remember that anything we say is not a solicitation to buy or sell any securities, but we are here to help answer your questions. Give us a call at 913-259-2110. Sure appreciate you coming. Nice to see everybody on Fridays, and we will see you 1 week from today. Have a great weekend.